Hello, I'm Paul here. Today I'm going to talk about the new strategy that I found with the volume, and today I'm going to be talking about how to use it for the stock market, specifically use it for doing options. You can also use it for just regular trading. Tomorrow I'm going to talk about how to use this same strategy for doing it with crypto, but today I'm just going to stick with options. So the strategy that I found, and this is, I had to put a big disclaimer out there, but from what I've looked at with this formula here, it's really effective. But, you know, big disclaimer there, I'm not responsible for any profit or loss. Uh, so anyway, I just want to kind of go over the basic strategy. I'm going to remove everything and to show you guys how to do it for yourself. Get your TradingView account loaded up. Now, I do this strategy, right now the stock market's closed. Uh, it's weekend. But I do the strategy on the hour. I find that the most effective. You can also do it on the day if you want to do it for a longer period of time. But you only need two indicators here. And the first one is, it's the one I've been talking about the last couple videos, the moving average exponential. You just load that one up. And then you go to make sure your chart is on the time frame, make sure your chart is linked to whatever minute or hour that you're looking at on your chart. Since I'm doing hour, we'll do hour. And we got to go to input, and I changed the link to 8. And then what you want to do, you want to get a color that stands out. And that's basically the indicator. That's your 8, your moving average exponential. That's the first one you need. And basically, I don't need to recap it. I basically said in previous videos, you look for the candle to push up or down through, a green candle pushing up or a red candle pushing down, which is your first confirmation. And, I've got a whole bunch of videos. I'm not going to go into that on this video. I've made a couple videos on this specific strategy alone. But the add-on that I want to talk about today, which kind of really helps everything tremendously, is using just loading up your volume. So put volume, and we load up volume. So you got your volume. So these are the only tools you need for this strategy. What you want to look for in this strategy, when the stock market's open. When the stock market is open, you want to pay attention to the volume. Notice the volume down here, and you notice the volume. Usually, it's green and it's red. It's green and it's red. You just know that green, red. Most of the time, red, green, red. It's usually green and red. So you can usually find a pattern that's, you could probably predict when it's going to go up and when it's going to go down just by the green and red. So the formula for the strategy is really easy. You wait for a pattern for, let's say it's a cycle. Let's say there's a bunch of red. Let's find a bunch of red. Like right here. Down here in the volume, right here in the volume, you see a bunch of red. And then you see it turn green. So when I want to do, like, let's say an option, for example, I would look for the red, and then the first green candle, I would just look at it. And then what I would basically do is up there in that corner, I can't show you, but yeah, maybe I can. See up here in this corner where it says volume? So basically, when you get your first, you go from red to a green in the volume, that candle, that bar down there, you want to look at your volume. And you want to look at, for the stock market, I've noticed, just by looking at this yesterday, if the volume is about close to 1 million in volume for that one little bar, it's usually a good sign that it's going to go up, or it's going to do with the rest of what that volume is. It's not going to switch and go red, or it's usually going to go in that direction when you have a big amount of volume on that bar. So me personally, if you look for the red and then you wait for it to change to the green, or you have the green and then change it to a red. And that first candle is the one that I look at. And I look at the volume on the first one. And if that one is about 1 million or more in volume, that is an indication to me that the next couple bars or candles are going to be that same direction. So let's find a situation where that bar is 1 million, because I probably would do this one. Let's just see, for example. See, that's red right here. Look at the volume on the bottom. It's red, so you wait for it to turn green. And then you look at your volume up there in the corner. It's 768,000. So that's close to 1 million. So if I were to do this one, I would do a call. I would do a call around 392, and then if I did this as an option, you just wait it out and get in and get out. This took these. See these candles. Yeah, these candles are 21 hours. I don't know how it's 21 hours. It must have been a weekend or whatever, but it's 21 hours, 4 bars. There's a difference in price, $842. So we got 842 times 50. So that was $421, roughly around there. So let's look at a couple of other examples. I want to find one that has 1 million. Let's look at this one up here. Now this one is good. This is a good indication right here. Notice this candle right up here at the top. You see a green. You see green and then it turns into red. So this candle right here, you kind of base it on, look at the volume. It's close to 1 million. So for me, I would do a put, because the amount of volume that is in that one volume bar is big. So that I would actually do a put in this situation. So I would do a put for what, 398, somewhere around there, and then I just wait, and I probably wait right down here. So that was let's do 1 day. That was 726, or 7.26. 7.26 times 50. That was about $400 right there. So let's just go back and look at a couple other examples. So the first thing you want to do, you want to, I'm going to keep repeating myself a couple times so you guys understand this. I look for the bar to change from either a green to a red or a red to a green. If it changes from a green to a red, I'm going to do a put. If it changes from a red to a green, I'm going to do a call. And then if you're doing regular day trading with stocks, you can't do it when it goes down. You just have to wait from a red to a green. So let's just look at another trend here. We just waited out. So right up here we see green and then red. Green, then red. So this red candle, we want to check it and see what the volume is on it. This one is 1.86 million. On that volume bar right here, just one moment right here. So do you think if the volume on a red candle is 1.86 million, what direction do you think it's going to go? Do you think it's going to go up? Do you think it's going down? It's going down. So let's see how much this would be. So we wait it out all the way down here. Let me get you an estimate here. So for this example, I would have done a put for 417 or around there. And we just see how much we would have made. This would have been 3 days, 1547. 1547 times 50. He made $700, $800 in 3 days. Pretty good, huh? So I'm going to tell you real quickly, I'm going to do 2 more examples, but I also want to make it clear when not to do this. When not to do this, when is a good indication that it's not going to be a good cycle of volume, because that does happen. So let's just look at an example. We got a red candle here. Okay, this is a good example. Okay, like I said, the candle has to be close to the first volume after the switch from red to green or green to red. If the candle is not close to 1,000,000, if it's not close to 1,000,000, I don't do it. Look at this one. This is 441,000 after the switch from the red to the green. You see the volume is 4,400. This is not enough volume for me. So what this is telling me is it could go up, but it might be brief. It might be won't. That's how you know not to do it. You got to wait for at least 1,000,000 or a high volume on that candle. So that's how you know when not to do it. And let's just measure it real quick to see what it would have, if you would have made anything. If you waited out here, yeah, that's 5. So it's went up 5 points. So that's 5 times 50. You still made $250. I mean, but it's not as big as the other ones. And then it's like sideways. So I'm going to do this 2 more times here. So the first time we see what we want to look at here, we see a green to a red, a green to a red, green, and then I'm looking at the volume. I'm not looking at the candles. I'm looking at the volume. We see a green to a red. So when it switches to a red, we look at the volume. The volume is 1.19. So what we're going to do is, in this scenario, we would do a put for 427, wait it out, and in 3 days, let's do even 3 days. 3 days, 1198. 1198 times 50. It's $600. So 3 days you made around $600. So right around here, let's just test this when not to do it theory. Okay, so we see a red, and then we see a green. Now this one is kind of tricky because it's close to 1,000,000, but you see it's not. Let's see. If I did a call and I waited this one out, this one was it was only 50, maybe $75. So in this situation, you also want to do the first thing. What I've covered first in my videos was look for the red candle to push through the 8 EMA or the green candle. So it probably doesn't work all the time, but it works majority of the time. So remember, just be cautious about it. Anyway, I'm going to do this 2 more times, and then until you guys get the point. So we see a red candle, red bar, green bar. So the green bar has 975,000 for the volume. That's a pretty good amount. And we also see the green candle pushing through the 8 EMA. So in this scenario, I would do a call for 420 around there. So let's see how much we would have made right here. 6 hours, 638. 638 and $319 in 6 hours. You could have stretched it out for a little bit longer too. You could have Let's see, you could have gone all the way up here at the top. Could have just wrote it out for 4 days. Could have bought a contract for a week and wrote it out for 4 days. So this would have been 500 if you wrote it out for that long. And what you can do once you start earning gains from this is you can start buying, as your income starts getting bigger from the gains, you can buy more contracts, and when you buy more contracts, you'll times 2, times 3, times 4. So I'm going to do this one more time. I'll do it 2 more times because this is kind of exciting to look at. 2 more times, and I'll go. Okay, so we see right here, we see a red and then a green. The volume for this green is 804,000. So what I would do in this situation is I would do a call for 406 or around there. So I do it right here, and then I just write it out for a little bit till I get my gains. And that one is what, 50 times 5? That's not a big one. 5 times 50, yeah, $300. It all depends. Let's do this one more time. I want to try to find. Here's a big one. Here's a big one. Let's end it with this one. Okay, so what do you guys predict of that green candle on the bottom? What do you think the volume is going to be for? I bet you it's going to be over 1 million. So we look here on the bottom here, we look at the red, and then we look at the green. Well, I was off, but anyway. Now, anybody could look at this and be like, well, the volume is close to 1 million. So we look at the next one, and the next one goes down. So if you base it on the volume itself, you could probably still miss out on some pretty good ones. But just do your own judgment on these things. So anyway, if we got in right here, we see the red, and it goes green. I would have done a call for 390 and rode this thing out. This is about $1,000 right here in 2 days. So anyway, I found this extremely helpful. I hope this video helps you guys. Remember, I'm not responsible for any profit or loss. Tomorrow I'm going to go over the same strategy, but I'm going to use the same strategy for crypto. Other than that, if you like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.